This is going to be the ultimate guide for supply and demand trading, and I will share as many tips and tricks about supply and demand trading as I can in this video. So hello, welcome back. And in my last video I asked you what you want me to talk about next, and almost everyone, or the most people, said they want me to talk about supply and demand trading. So here we go, and really make sure to let me know in the comments below what you want me to talk about in the next video then, because I really listen to everything that you say, I read everything that you write, and I always look forward to new ideas so I can make sure that I really do something that you also appreciate. So let's get into supply and demand trading. And there are many different ways how you can use supply and demand trading. There are many different ways how supply and demand trading is drawn on your charts. There are many different supply and demand concepts, and I will show you, or I will try to show you as many as possible over this course of the video. By the way, after only 4 years of using this microphone, I finally figured out how to use it correctly and where to talk into. So this was just a little bit of an aha moment a few minutes ago. So supply and demand trading, what we want to focus on, and especially in the beginning when you just get started with supply and demand trading, is you want to focus on very obvious things on your charts. You want to look for very important turning points. So for example, when the market goes from a strong uptrend to a strong downtrend, you want to look at the turning points, and you want to look at what has happened around the turning points. You want to look for very big candles. You want to look for strong turnarounds. And supply and demand trading at its core, it should be, or you should very easily see a supply and demand area. It should be something really obvious, and I will try to get this across during this video. And supply and demand trading at its core, when we talk about supply and demand trading, for example here, what do we have? So the market was in a strong uptrending phase for 1, 2, 3 months. 3 months, even longer when we zoom out a little bit. But for 3 months it has been trending here up in this trend. And then at this top, the buyer and the seller dynamic has changed, whereas previously there were more buyers. Now suddenly, after this range market, after this consolidation, the sellers took over, and they not only took over, but how did they take over? Look at this trend, or look at this turnaround better. Strong candle, and then series of candles. Whereas previously, when we look at all of those 3 months or even 4 months of trading, there were only maybe here one area where we had a similar bearish candle, and other than that, here maybe one, but not over a prolonged period of time. So we never had anything like this here. We never had a series of very strong bearish momentum candles. So those are just two things we can put together. A strong uptrend turned around, and how did it turn around? With super strong selling. So we want to look at the breakout point. And of course, there are many different ways how you can use supply and demand trading. This is just one way of supply and demand zones. And during this video, I will show you, I think, around 5 or 6 different supply and demand techniques. So this is just one. And what we want to do is we want to look for the breakout point, because obviously here, the dynamic and the balance between the buyers and the sellers have shifted. Suddenly, at this point, the market and the price was so high that it was not attractive anymore for the buyers to buy, and it was so high that it was very attractive for the sellers to sell. And keep in mind, this is Forex now. To turn a market around like this, Forex overall is $1 trillion turnover market, so it takes a lot of time, a lot of volume, a lot of strength, a lot of buying power to turn a market around like this. So always keep that in mind. So at the core of those turnarounds, of those breakouts, in this case, when the market turns from a bull to a bear market, this is what we would call a supply area. Let me just mark it. So this is what we would call a supply area. Here, the powers between the bulls and the bears have clearly shifted, and we want to have this level on our charts. because what we are going to do is we are waiting for price to get back to this area, and then we are going to look for new selling opportunities. So let's see what happens when the price got there. You could see it took a while for the price to get there. Whoops. Let me zoom out. And here the market came close. So the market, not very, let me see if the market actually came, no. The market came close to this area and even before it reached it, so drawing supply and demand areas is more an art than a science. However, it doesn't matter because we are not going to trade supply and demand areas blindly. Never trade them blindly. Always wait for confirmation around those areas. And in this case, we have a very, very textbook confirmation, a very nice signal. You can see the market was in a more or less in a range market. Then we had a failed breakout to the upside. And how does the failed breakout look like? You can see those are rejection candlesticks. So two small candles and then suddenly a sudden breakout or a breakout attempt. Within the same candle, the market was reversed and then it sold off. So this is your rejection candle. It doesn't have to, sometimes the market will do things like this where it comes a little bit shy of a supply and demand candle zone. Some other times, as we will see later, the market will actually spike through a zone. And we are never going to trade those blindly. Please always remember that, write it down. Never trade them blindly. And what you could do is either you trade it directly after this candle has formed, after you see a nice rejection candle. So what we are looking for is either pin bars, engulfing bars, maybe an inside bar strategy, or you could also go to a lower time frame and see if this is a pattern. So it seems like the market has established here a little bit of a lows, two lows at the same area. So this might look like a range breakout on maybe the 1 hour time frame or the 30-minute time frame. But if you want to trade it on the same time frame, you could just look for candlestick patterns. And then the market formed another supply area just underneath this one. Why is this a supply area? Because this is the starting point of a bear market, of a very, very strong bear market. And we always want to look for the very obvious things on our charts. There's no point in sitting in front of a chart and looking and asking yourself, is this a level? Is this not a level? I don't know. It's too small. Maybe I wish it was a little bit bigger. If you catch yourself pondering about something, a technical concept like this, it's usually a good sign that you're not looking at a valid setup or at a valid zone or a valid support and resistance level. The good things, they will always jump right at you. So this is something that is very, very common as well. So you have your, let's say you have your bullish trending attempt. So a little bit of a bull market or a short bull market. And then here it turns around. And this is very, very typical. We'll see it here and here again. Before, just underneath the market top here, just underneath the market top here, there is usually a small consolidation happening before the market really breaks out and really starts the new trend. This is very, very common to see. The market usually never starts just completely reversing on the spot, but very often very close to the turning point, very close to the actual top or bottom, you see a small consolidation. And this is also how new supply areas are. Okay, this should have been saved. Okay. Don't judge me based on my spelling. We're not here to win a spelling contest. So supply and demand areas, those are other ones. They not only happen at those breakouts, like in the first example, but they also happen just before or just underneath turning points, where you see a small consolidation and then a huge breakaway. In this example, it's a little bit questionable if this is really a good one. Here you can see it much, much better. This is a huge candle that we haven't seen in all of this price action. If we zoom out, you can see we've probably for hundreds of candles not seen, or dozens of candles at least, seen anything like this. So you want to look for a trend that gets reversed, and then before the new trend starts, and you can see you want to see a good new trend. And then very close to the turning point, you want to see a small consolidation. And then a very strong breakout, very, very important. You want to see a big move away from the level. And then you just wait, you draw your zone, and you wait for the price to get there. You can see, whoops, sure why. Okay, so you can see here, this is how then the market reacted to the supply area here. It came close, sold off. It came here close multiple times, it sold off. And then at this point, the lower zone was already very consumed. There were many times that the market has dipped into the supply zone here, the lower one. At one point, there will no sellers be left anymore in the market, and then this zone becomes useless. As I said in my last support and resistance video, the more often a level has been used, the less likely it is that it will work again, because at one point everybody will be aware of it. So this is also true for supply and demand zones. After 2, 3, 4 touch points, the supply and demand zone is usually not good anymore. And then the market goes to the next supply and demand zone. And how does it go? Very interesting. It makes a spike into the zone very precisely, and then it picks up new selling pressure and sells off again. So how do you trade that? You could look for, on this time frame, look for patterns. In this example, they are not really that nice patterns. What you want, again, something like this, for example, a pin bar. Here we don't have anything really. So in this case, you probably would have gone to you could have gone to the lower time frame and looked for maybe a pin bar, an engulfing pattern, or other breakaway patterns. And then here, in this example, you could probably go to the 1 hour time frame and you see something like a head and shoulder, the head, the right, the left shoulder, the head, and the right shoulder here. And then you can see how strongly this supply zone triggered a new sell-off. And you can see this zone, for example, is still fresh. So this one, there might still be a chance that the market is still going to react on it. You can see this is where the market currently is. So this one has not really been touched that significantly yet. So the next time the market comes back into it, there's a good chance that the market will react. Also this one. Here the market hasn't really fully reacted to this level. So there's a good chance that the market will react to it again. Here we see a few more examples. And again, we want to look for something really dramatic on your charts. You can see a strong uptrend, pauses, and then it turns into a strong downtrend. This doesn't just happen by chance or by coincidence. There are very strong market forces. It could be central banks, it could be big hedge funds, it could be whatever it is that is behind those new trends. Normal retail traders, they cannot turn around a Forex market like this in such a strong way. So there must be really a strong force behind the move. And you can see after this consolidation, or even here during this consolidation, the market then completely broke loose. Here, this is what really caught my attention. A super strong bearish candle away after or breaking out of this range pattern. So at the core, you can see a small consolidation and then suddenly a huge drop. And big banks, big hedge funds, central banks, they cannot just enter their trades with one position, so they slowly need to build their position. There's this very important concept about supply and demand trading. And this is why so often you will see those small consolidations just before a sudden breakout. And this is another little clue that you need to be aware of. When you see a strong move, like here as well, you look at the origin, and if you see a small consolidation, a small back and forth, this is a very good sign that there are probably some really big players that are entering and trading here and slowly building their positions. They cannot just open one position, that they slowly need to accumulate it. And you can see here, the market then started to rally. And then where did this rally end? Right at those two supply zones, right at this very important turning point. It didn't lead to an immediate sell-off, but if you are long here, this should really get your attention, because it's very unlikely that the market is going to rally through this after you see such a strong reaction. And even more interestingly, the market, after forming this range market, then completely sells off after it has consumed so much of this supply again. Here as well, the market has two demand zones. So in this case, we're looking for an area where the EA, where the buyers have taken over. And in this in this example, we call this a demand zone. Two demand zones on top of each other. So this one has not been fully touched yet. You can see the market came close to it and started to move higher. So there's a good chance that the market, when it comes back, that is going to show you some type of reaction as well. So those are good demand levels to have on your charts, whereas here I would not have them on my charts going forward because they have been consumed up here quite a bit already. And by the way, if we go to a lower time frame, here, there's probably going to be some supply zone in here. You can see consolidation and then this huge candle. Whenever you see such a candle that you haven't seen previously, and you can see when we zoom out, there was one here at the origin of the demand zone. There was one here at the origin of the supply zone. But other than that, we can't, and here as well. Here was probably some major supply area that we could have drawn on the lower time frames. It ended also this uptrend here, which then led to a new downtrend and the formation of a supply zone. You can see how interestingly this all interconnects, but let me get back to this zone. So let's go to a lower time frame actually. I don't know how it will look like on a lower time frame, but yeah, you can see that right before the breakout, there's another small consolidation. And usually I draw my supply zones around the consolidation that happens before the breakout. And you can see this huge move. Where did it stop? Right at the supply zone. So this could have been another selling opportunity. If you missed the first breakout, you could have traded this with a pullback strategy into a supply zone. So you can see how interestingly this works together. And let's take a look at more examples. Obviously, I've prepared quite a bunch for you, and I want to make this a very extensive and comprehensive video about supply and demand zones because I get asked a lot about those. So let's zoom out, and you can see I marked a few, and I will show you different concepts of supply and demand. And now people will come and say, hey, Rolf, yeah, but you only show what is on the left-hand side of your charts. Trading happens on the right-hand side. That's true, but if we want to learn about new concepts, we have to look left to see what has happened in the past. And we want to look for patterns that repeat itself. And those are the things that you will see often, time and time again. This is essentially how the market moves, supply and demand, buyers and sellers. So we need to look left to understand what is going to happen on the right. So this is something, this should really stand out. Strong downtrend, very strong downtrend, and then reversed into a strong uptrend. So this is really something that should catch your attention. And whenever I see this, I mark those lows. Those are not going to be support and resistance levels yet. Those are just single swing lows. But it's a major swing low because imagine how much buying power it needs to reverse a trend that has been going on for almost 4 months. And it doesn't only stop here, it really reverses the trend to a new uptrend. So at the core of this trend, there must be there must have happened something where suddenly some big buyer or a bunch of big buyers came in and completely reversed the whole macro trend. So what we are going to do is keep this, and you can see the next time the market dipped into this zone, this might have been news driven, but even if it has been news driven, the market will respond to those supply and demand areas, in this case a demand area. And you can see how strongly this market reacted. So in this case, I would keep this level on my charts because you can see what an amazing reaction we had. Let's see what has happened again. Let's go forward and go forward until the market, it comes back again. And the similar reaction once again. You can see a huge turnaround within just a single candle. A strong drop is reversed into a strong uptrend. This takes a lot of buying power. Let's keep this on our charts. I marked now the low of this candle. And okay, the market hasn't reached this yet, so I would definitely keep this on my charts because the market has still, it seems like it has still a lot of buying interest in this area. So you really want to keep this on your charts. There are a few other levels or zones that I want to show you. So here you can see, no you can't, now you can. So the market was in a strong uptrend, and then here at the top it reversed. And before this huge drop was initiated, the market had a small consolidation. So here roughly. And then the next time the market comes back, we have a little bit of a rejection candle. On the lower time frames, this looks probably a little bit more dramatic with a rejection pin bar probably, or an outside candle. And you can see after it picked up the selling pressure, it sold off again. By the way, we can see it here. Here's probably another small demand area on the lower time frames. So here is a very strong candle. Here's a consolidation at the origin of the candle. It's not as nice as here. Why? Here we actually have a complete market reversal where the market goes from uptrend to downtrend, whereas here this is just a consolidation within a trend. So you can see, yeah, the strong drop consolidates at this level, but it's not that precise. You can see it overshoots it a little bit. It does spend a lot of time trading around it, so it's not as nice. So you really want to see those zones close to turning points and very, very close to turning points, such as here, a strong move up, and then you can see this was probably also here a head and shoulders that you could have drawn, left shoulder ahead, and then here two right shoulders, and then before the drop. This is something that I've seen many traders trade actually, is that they're interested in trading the right shoulder. And here you can see how did this right shoulder form with a nice consolidation. So before this huge drop, there was a consolidation here. And you can see the market gapped up a little bit. So there was already here quite a bit of trading activity in the market. And then here suddenly the big breakout drop. And then the next time the market overshoots the level a little bit, but it shows you another consolidation area, another triple top. You can see, or maybe 4 times, 1, 2, 3.5, and then it leads to another reversal. So it's really interesting to have those areas on your charts. You don't trade them blindly, but you can wait for patterns around those. You can look for, is there going to be a candlestick pattern maybe forming, and then this is how you would use it. And that's it, I think, for this pair. So right now, let's move to the front. Yeah, okay, here's one more that I marked. This is a different type of supply, or yeah, in this case, a supply area. Here you can see something really, really dramatic and drastic has happened on the charts. This strong selling sequence, let's look out. Let's look back. We haven't seen this in, I think, ever since here. So this is January 2019. This is August, so 3 quarters of a year. And by the way, you could probably draw some supply area here, because this seems to be the origin of this huge drop. The market hasn't been there yet, but you could leave this on your charts. However, whenever you see something that significant, not only a series of bearish candles, but how big are they really? There are huge bearish candles, which you don't usually see on a chart. And if you haven't seen such a thing, it could be a single candle, it could be a sequence. If you haven't seen something like this in hundreds of candles, this should really get your attention, because this is really showing you something very, very significant. And then you can see this uptrend here. It stopped multiple times. Here the first time, here the second time, and now the market is completely dead over this period. So now the powers between the bulls and the bears are neutralized, and now they just need to make up where is the next market, or where's the next trend going. But being able to look at those charts, at those markets, it could also help you time exits on your charts. Or you would go down to a lower time frame, which I actually haven't, but let's take a look. And you could see a major pin bar here. So this is what I've been talking about in the beginning. Those are the candlesticks that you want to see on your time frame that spike into supply and demand area, and then you could use them to time a new entry. And you can see that afterwards the market came back a few times into the zone, picked up more selling pressure again. So very interesting phenomena. Let's go to the New Zealand Swissy. Let's go back to the 4 hour. Scroll back. I marked a few different zones for you. And by the way, supply and demand area, I find that it is a leading indicator in price action trading. Very often you will see that supply and demand is actually what causes and what creates support and resistance. So before you can find a support and resistance area, you will often see that a supply and demand area is actually at its core. And you can see, let's zoom out. So again, you want to look at important turning points. So here's a big turning point. The market was in a downtrend and then sold off. By the way, here you could have done this, I just saw that. Here as well, a strong uptrend reverses into a strong downtrend. And the stronger the reversal is, the more likely it is that the market will respond to it the next time again. And you can see how it did here. And by the way, this is then how a supply area is forming as a resistance area. You can see the first supply area leads to 1, 2, and then here at some point it just gets too crowded, and then the market is not really paying attention to it anymore. As soon as too many people are aware of a certain level, it's not going to work anymore. So let's take a look here again. Very strong very strong downtrend, very strong uptrend, and you want to look at the turning points. And this is the great thing about supply and demand trading. Really, you don't need to predict anything. You just look on the left what has happened in the past, and you want to look at really the obvious things. Where's the market really obviously showing me something that hasn't happened in quite a while. So clearly the market has been trading and selling for months, and then it started buying, it started trending up for months. And at the origin, you really want to draw your levels on your charts. And then you just wait for the market to get there again. In this case, the market came back here. It even showed you a very nice breakout pattern with here a triple bottom, and then here the market has a triple, or 1, 2, 3, 4 times high, the breakout, and then a new uptrend. So you really want to wait until the market gets there, and don't just get too excited. I know this happened to me in the beginning when I was aware of supply and demand areas. I wanted to trade them blindly because I was so excited. Oh, the market is there. Let me just get in because I know it's going to going to rally or not. That's not true. Sometimes the market will fail around those areas, and you really want to have either a pattern, or you go to a lower time frame and try to time it with entry with candlestick patterns. By the way, this also could still be something that you could use in the future. Strong uptrend turns into strong downtrend. Let's see, the market hasn't been back yet, I think. So this is something that might still be valid. Although at one point, I would probably not pay too much attention to it anymore. It depends a little bit. If it's a very strong point, you can just keep it on your charts. It doesn't hurt. And then you'll see what happens in the future, or maybe nothing happens. And then the market here, what does it do? A very strong bullish trend reverses, and this is how support and resistance is always created. You can see the market doesn't immediately, or well, it does come back to the level, but it doesn't make a big reversal here. It overshoots the level here. And that is why it's so important that we not trade those levels blindly, because you may run into something that is going to really hurt you, because the market can sometimes push through the levels without ever looking back. And then you don't want to be at the mercy of such a market. You always want to be prepared. Yeah, and another example here, for example, an uptrend, a downtrend, and then you want to look at in this case, you can see very close to the turning point, there was a consolidation, and then the market broke out. And then here, this might even be more interesting because the breakout from this consolidation was much stronger. You want to see a strong breakout. That's very important for supply and demand trading. And you can see this is where the market is currently stalling. There's still a good chance, that's why I have it on my charts, that the market will show some reaction in this area. This is what I call, or what is called, not I call it, a spring pattern. This is usually also a sign of demand, supply and demand trading. So that is why it's still on my charts, because there's not a big breakaway from the level, but this spring pattern here is something that is often an indication of potential supply and demand. By the way, you could also draw on the lower time frames, maybe for short-term supply and demand trading. Here you have a strong turnaround from strong uptrend to strong downtrend. So here is the last consolidation before the big breakout. You can see, maybe I should zoom in. So here This is the turning point, and here's the strong breakout, and here's the consolidation before the breakout. That's why it is a supply area. And then you can see many times, or well, a few times, the market sold off once it gets there. And then at one point it becomes just too obvious. It has been consumed too much, and then you could have traded it as a breakout to the upside. So this is another way of looking at supply and demand. Let's take a look at a few more. I still have many areas marked actually for you, but at one point I think it will become clear what you want. So strong downtrend, strong uptrend. So you could either draw a level on the low side, on the lows, to wait for the market to get there. Or in this example, you can see we have two consolidations. This is really my favorite area because it's very close to the turning point and it's a strong breakout. Also here again we have a spring pattern, this little rejection or failed sell-off attempt. Then here again small consolidation and then a strong breakout. This is called supply and demand stacking. So sometimes you will see this, you have multiple areas on top of each other, and yes, sometimes the market will pay attention to the ones before that, but at one point the market usually trades into the lower ones, because think about it, if people want to buy at a demand area, obviously they want to buy at the best possible price, and the best possible price is the lowest possible price. So when you see supply and demand areas close to each other, on top of each other, usually it will go to the lowest or the highest in case of a supply zone. So let's zoom out and you can see the market is very close to the level. It did pay a little bit of attention to this one. It at least led to a consolidation for 2 weeks, but the market is on its way to this area, and I'm really excited to see what the market is going to do once it gets there. Here are, by the way, spike supply and demand patterns. We have seen those. Such a strong bullish candle, and then it reverses on the spot, and it's not able to push higher. If you see something like this should really get your attention. And then the market comes back to it, spikes again, and then it sells off completely. Could have drawn here a trend line, break and retest on the trend line on the lower time frames, and you can see how this already indicated that the market, here are a lot of sellers. The price is so high that the sellers are really interested in it, and at one point then if you really get the signal with a breakout point or with a candlestick pattern, it really reverses. Here as well, the market was in a strong downtrend, and then within one candle it goes from a strong downtrend to a huge uptrending candle. Obviously here something must have happened that is really significant, and this is another area. You can draw it, and you can see in this case again the market did not really pay attention to this level. Why? First of all, sometimes there's just no why. Sometimes it just doesn't work. Nothing in trading works 100% of the time. Very important. Second of all, there are multiple demand levels beneath this one. So again, supply and demand stacking is a real thing. And if there are people wanting to buy, they're not going to buy here. They're not going to buy here as much. They're going to buy as low as possible, and you might find buyers here, or you might even wait, or you might even have to wait until the market gets to an absolute low, which is even lower. However, there's a good chance that you will see some type of reaction on this level as well, because this is the recent uptrending market. So there's a very good chance that you will see some reaction. Let's take a look at maybe one more example, and I think then it will become clear. By the way, when we look at this one, we can look at, okay, what are the current levels? What are the levels that are still in play? Zooming out, let me just draw it very briefly in, and then we will zoom in. So here, clearly a strong turn point. Here, a strong turning point. Here is a huge turning point. And I think that's it for the recent patterns. So let me zoom in a bit, and you can see, okay, here a strong turning point. Very strong downtrending candle reversed on the spot. So first of all, you could have your level drawn somewhere at the lows, and then probably even here, I think. I was looking at this level, but this one is very close to it. So this is a better level. The market tried to sell off again, but it was reversed. And then away from this level, here started the uptrend, really very strong uptrend after this small consolidation phase. Then this one is the next one. the market was trending up slightly, and then here something has really changed in the buyer-seller dynamic. Here there's a lot of selling going on, so there must be a big pocket of sellers waiting for the market, so this is still a good level to have. And obviously the big turning point here as well. You might say, okay, here's a small consolidation close to the top with a strong breakout, so you might put it here as well. And then you will see what is likely to happen, or where's the market going, and is it showing us some reaction. And let's take a look at a few more examples. So this is again a strong downtrend, was reversed here to a strong uptrend. Here, by the way, you could have said, oh, there's a strong turning point. And yes, you're right. In this case, this spike, I hope you can see it, this spike was very, very strong. It didn't lead to a complete bullish reversal. You can see here this bullish phase after the spike was very short-lived. So it's not as great, but it still looks decent. And then the next time the market comes back, it didn't pay immediate attention to it, but shortly afterwards, you have an inverse head and shoulders here probably. Let me zoom in. Left shoulder, the head, and then the right shoulder, a little bit messy, but close enough. And then you see the rally. So you can see, even though this might have not worked out, shortly afterwards, the market did really reverse. And not only did it reverse, but here, very close to the turning point, here's a strong breakout candle. You have a small consolidation. So this is another supply area, demand in this case. So let's see. And here, by the way, another one. This one probably was even initiated a little bit earlier. So here you can see a selling attempt was reversed on the spot. So this is clearly something that has a very, very dramatic effect on the charts. And then the next time the market comes back to it, strong selling attempt, strong or small consolidation, and then strong bullish attempt. So clearly there's still a lot going on here. And then going forward, you can see very nice effect here, how the market again rallied. So very, very strong reaction. And then the next time the market came in, very small reaction of the first level, still a decent reaction. And then at this turning point or at the demand area from this turning point, here now a very strong reaction as well. So this is how, and you can see even the next time the market comes back to the level and shows you another reaction at one point as well. And then it becomes just too obvious, too many times the level has been used and the market just falls through this level. So this is really how support and resistance is created as well, through supply and demand areas. And I think this is a good time to wrap this up. Supply and demand trading, it should become very clear what it is. I do have more examples waiting for you, maybe for another video, but really let me know in the comments below what you want me to talk about in the next video. Anything regarding to price action, or if you have any other questions regarding position size, risk management, processes, anything that you are interested in, let me know and I will make sure to make a video about it.